Hello and welcome. I am Professor Clock. In the market, many people ask what's going to happen next. But the better question is, what is happening now? Today, we are going to look at the data from May 2026 to answer our fundamental question. What time is it on the market clock? To do this, we won't be looking at news or opinions. We will look at the one thing that truly matters: energy. Because as I always say, demand ratio is the energy behind the market. To understand where we are, we must see where we've been. After bottoming out at the end of March, the market began a truly powerful rally. For nearly 7 weeks, we saw a classic uptrend. As you can see, it wasn't just price that was rising. Critically, the demand ratio, the underlying energy, was rising right alongside it. This indicates intense and sustained buying pressure. When you have high energy supporting high prices, the market enters a phase I call high balance. Think of it as a powerful locomotive, engine roaring, moving at a steady, high speed down the track. This was a market in a state of strong, confident equilibrium. But in the final week of our analysis, something changed. On Thursday, May 14th, the market hit a peak. The price ratio touched 1.00, its highest possible value, and the demand ratio hit a staggering 0.96. The engine was at maximum power. Then, on Friday the 15th, we saw a shift. Price pulled back. But more importantly, the energy pulled back. The demand ratio dropped from its peak of 0.96 down to 0.93. For the first time in this entire rally, the demand momentum turned negative. This is the first sign that offer pressure, or selling, is beginning to challenge the buyers. And we see confirmation of this in the VIX, which began to creep up from its lows. This small rise in the VIX reflects the bit of uncertainty that always enters the market when a perfect trend is challenged. So, what time is it on the clock right now? The market clock still reads high balance, but it is now a balance under pressure. The engine is still running hot, but for the first time we can hear the brakes starting to squeal. That negative demand momentum signals the potential start of an exhaustion phase. Think of it like this. A champion fighter has dominated the match for 10 rounds. But in the 11th, he gets hit with a clean shot. He's still the champion, he's still standing strong, but for the first time, his absolute dominance has been challenged. The market is still strong, but it has been challenged. So, the bottom line is this. The market's powerful and balanced uptrend has shown its first real sign of weakness. I do not make predictions. The question now is whether this is simply the market pausing to catch its breath or the beginning of a more significant pullback. What we must watch now is whether the sellers who showed up this week will press their advantage. I'm Professor Clock. Thank you for your time. And always remember, demand ratio is the energy behind the market. This video is for educational purposes only and not financial advice.